So we know that tax time can often be an interesting and stressful time, and that there's a lot of things that are changing and different. So we like to do this once a year. You will be receiving fairly soon in the mail our annual mailer that talks about the tax system and the forms and lets you know what's up. But we thought we would do this as well. So we have Monique, Bonnie, and Druin, who will all be taking different parts of today. They'll introduce themselves when we get to them. And I want to thank them all for being here. They do amazing work with people in the region to make sure that they get lots of the supports that they require. So I want to also let you know that we have had a lot of questions come in, and those questions have been given to the people that will be presenting to you today. So those summary of those questions should be answered in the presentation. And of course, especially Bonnie, these are folks that do this a lot and are experts in it. So I trust them to know everything that they need to know. But I want to thank you all for coming out. And if you want the recording of this when it's done to share with people that you know, don't hesitate to email us and we'll make sure to send you directly a copy. So welcome, and I will wrap this up when it's done, but I'm going to pass it off to my friend Bonnie now. Thank you everyone for coming.
And thank you, Rachel, for facilitating this very important workshop today and asking me to talk about something that just never seems to go away, our taxes. So we'll go to the slide 3, please.
And of course, always give us a moment while we're making the screens work.
I think, Druin, you were going to go over the agenda, or Monique, you were going to go over the agenda first. Yeah.
You have to unmute yourself, Monique.
Okay, here we go. We're going to get this right. Okay, so further to Rachel's introduction, Bonnie is going to take you through income tax preparation tips. And then Druin will cover off some very important information for those of you who receive the guaranteed income supplement in terms of, income tax and reporting income. And then cover some information from CRA with regards to fraudsters and scammers. And then I will close with the kind of assistance that is available to our constituents. And then Rachel will close it off with you. That's the agenda for today.
Okay, and the next slide, please. Again, thank you very much for hosting the workshop today. And if you could just go back to the first slide there, slide 3. So the community, my name is Bonnie Blackhall, and I am the coordinator of the Community Volunteer Income Tax Program. We call it CVITP for short, out of Opportunities Career Services Society. So community organizations host tax preparation clinics where volunteers complete tax returns for eligible individuals. The CVITP is a collaborative partnership between Canada Revenue Agency, I'm going to say CRA from now on for Canada Revenue Agency, and community organizations since 1971. In Campbell River, the CVITP is hosted through Opportunities Career Services Society, located at 300 St. Anne's Road, just across from City Hall. We offer drop-off tax clinics Tuesdays and Thursdays from 10 to noon and 1 to 3. This is all year long, and this year's been extraordinarily busy. We've done already 500 tax returns since the beginning of the season. Our email is taxes@ocss.ca, and our telephone number is 286-3436. The program's also offered in Powell River at the Community Resource Center at 7452 Joyce Avenue. Please make an appointment by calling 604-485-0992 and bring your government issued ID and pertinent paperwork with you. Our service is free of charge. We prepare current and prior year returns going back up to 10 years. You may be eligible if you have a modest income and a simple tax situation. The suggested maximum income for a single person is $35,000. For a couple, it's $45,000. And if you have children, add an extra $2,500 per child. We do not consider your situation simple if you are self-employed with expenses, have rental income, capital gains and losses, or have filed for bankruptcy. It's so important that you file your taxes each year. This ensures the continuity of your benefit payments. In particular, late filing can interrupt things like your GST, your Canada Child Benefit, and your, most importantly, your GIS or Guaranteed Income Supplement. So today, we're going to discuss getting ready to file for your return, My Account. Then I'm going to walk through a sample tax situation, excuse me, to show you how some of the tax credits work to reduce your taxes payable. They include tax credits, refundable versus non-refundable tax credits, the BC renovation tax credit. This is a great benefit that keeps on giving. You'll see how the renovation to allow better access or easier access in your home can provide 3 different tax credits. Then the disability tax credit, or DTC, how the tax credit works and how to apply. I'm going to take a brief digression and talk about the registered disability savings plan that goes hand in hand with the DTC. Medical expenses. Then after the tax example, I just wanted to have a note for our newcomers, our new immigrants. Then what happens if you owe money? What do you do? And then lastly, I'm going to talk a little bit about adjustments. So next, yes. So now's the time to collect all your papers. You'll need to calculate your income and support any credits, deductions, and expenses you might claim. While I'm talking, take a look at some of the papers you'll need. If you were employed or had investment income, your employer or financial institution will send you a statement of your tax slips. Some examples are a T3 statement of trust, income, allocation, and designations, T4 statement, T4A statement of pensions, that includes CPP, OAS, retirement pensions, annuities, and other income, a T5 statement of investment income. If some of your slips are missing, the copies may be in Canada Revenue Agency's My Account, which is the next topic, and Canada Revenue Agency, I already said that, will be called CRA. A little tip about medical expenses: rather than keeping each and every prescription receipt, you can ask your pharmacist to give you an annualized statement. Believe me, the tax preparer would prefer one piece of paper rather than small little prescription receipts. You can also claim things like out-of-town medical expenses for services not available in Campbell River. That might include mileage, meals, accommodation, and parking. So here comes a tip that's really important, and it needs its own slide. Next, please. It's better to prepare tax returns for the whole family at the same time. Often expenses that won't benefit one member of the family can just be easily transferred to another. And if the preparer has it up with a program, usually the program does which is most effective. So if, say, a dependent isn't there, and they're doing it, they're 16 and they're doing a tax return because they worked, you could miss out on some of your benefits. So let's go now to services that are in my account. So the slide that you see right now shows you what you can do or see with my account. And this is just a small list. So what is my account? My account is a secure portal that lets you view your personal income tax and benefit information and manage your tax affairs online. My account is convenient. It's available 21 hours a day, 7 days a week, easy to use. The hardest part is actually registering. After you've registered, you just log in with your CRA user ID and password. It's fast. Information is up to date and the transactions are processed immediately. For example, I've been e-filing returns and I can see something called an express notice of assessment on some of the returns immediately. And I can tell what day they're, if they're getting a refund, I can tell right away what day it will be issued. And secure. The CRA user ID and password are just part of the security. You can also log in with a sign-in partner, and that's how I log in, and I use my banking information. That makes it a lot easier. So my account allows you to track your refund, view or change your return, check your benefit and credit payments, view your RSP limit, set up a direct deposit, receive email notifications, and so much more. If you're registering with my account, you can also use autofill my return when you file online using certified software. Next slide, please. So the next slide, we're going to start with the tax credits. So what are tax credits? They reduce the tax that you pay on your taxable income. We encounter two types of tax credits, refundable and non-refundable, when preparing our returns. So what's the difference? So the first slide shows non-refundable. Non-refundable tax credits help reduce your taxes payable to zero. If your tax credits are more than your federal taxes, there's not a corresponding refund. Two examples of non-refundable credits are the basic personal amount and the disability amount for self. I'm going to go more in depth about these credits in just a couple of minutes, and you'll see how they work. So spoiler alert, the most important thing you need to know about non-refundable credits is that you take their sum total and multiply them by 15%. That's the amount that you get to deduct from your income taxes payable. And I'll say that again later. So the next slide is refundable tax credits. These tax credits can be paid to you even if you have no income tax payable. One such example is the working income tax benefit, which is now called the Canada Workers Benefit. And it's for families and individuals who are working and earning a lower income. The figures that we're using this year and the examples that we're showing you are going to be from 2020. So the numbers will be off by a bit, but the policies and the way things are calculated remain the same. So a single person can receive a credit of up to $1,395, another $795 if they have a disability tax credit. Even if this client paid zero in taxes, they could still receive up to $2,190 for this credit. Another refundable tax credit is the BC Seniors Home Renovation Tax Credit of up to $1,000. I'm going to be talking about this later. So summarizing the difference between non-refundable and refundable can be done as follows. Non-refundable tax credits reduce your taxes payable to zero. If the non-refundable tax benefit is $1,000 and your taxes payable are $600, the benefit will be capped at $600. Refundable tax credits are not impacted by your taxes payable. If the refundable tax benefit is $1,000 and your taxes payable are $0, the benefit will be $1,000. So what we're going to do now, and this is the slide I want to keep up for a while, is we're going to work through the credits for a sample couple. Please excuse the names of the couple. I'm going to show you how a couple with a total income of $53,000 can end up with a refund of $800 more than they paid in taxes. And of course, it's because of a refundable tax credit. So it's not possible to visit all of the tax credits that are available. We'll look at just a few with the following situation. So the client's name is Fascinating. He had an income of $53,769. And you can see that it consists of $7,369 OAS, $14,400 retirement CPP, and a $32,000 pension income from Spiffy. $5,000 has already been deducted for income tax. He is entitled to the caregiver amount, which I'll tell you about as we move along. Fascinating's partner is Bunny, and she had no income. She has a disability tax credit with CRA. In 2020, they completed a renovation and added an elevator at a cost of $10,000. So let's start with the next slide. So first of all, take a look at line 3,000, which is near the bottom, basic personal amount on this slide. It's the same for everyone whose income is under approximately $150,000. Next is the age amount for those who are 65 and older. It's 7637 is the amount there. The amount for 2021 is 7713. The amount is scaled back for net income between approximately 39,000 and 89,000. After which the amount of the credit would be $0. So did you notice something a little fishy on there? Look at the income on line 26000 in the taxable income section. Bunny now has an income of $16,000 and Fascinating's has gone down by $16,000. This is pension splitting at its best. I promised to go over it before we leave non-refundable credits. So the next slide, please. Next, this is the spouse or common law partner amount, line 30300. You may generate a credit if their net income is below approximately 13,000 or below 15,500 if you're entitled to the Canada caregiver amount. In our example, Bonnie's income was 16,000, which is above the threshold, so there is no non-refundable credit. For more information, you get a Schedule 5, and if you look at that, that helps to explain it. The next slide is the Canada caregiver amount. This is the amount for spouse or common law partner and or eligible dependent 18 or older. It's just under the age amount in the non-refundable tax credit section. I should have highlighted the amount rather than make you look for it. You may receive this credit up to it's $7,348 for 2021 if the net income is between approximately $7,300 and $24,300. The surefire way to be acknowledged as a caregiver and to qualify for this tax credit is for a spouse or dependent is to be identified on the approved disability tax credit application. However, in many instances, the caregiver amount can be claimed without a DTC. The Canada Revenue Agency may ask for a signed statement from a medical practitioner indicating that the person is dependent on others because of an impairment in physical or mental function. The letter should include the nature of the impairment, when it began, and how long it's expected to last. Okay, so next, please, renovations for accessibility. So line 31285, it's highlighted here. The computer program has split the non-refundable credit, giving Fascinating the 7,600 and Bunny 2,300. So that's for the $10,000 elevator I mentioned. Okay, next slide, please. The home accessibility expenses are reported on line 31285, as shown on the last slide, and they allow you to claim a non-refundable tax credit of up to $10,000. So that would equal $1,500. I mentioned that non-refundable credits, you have to multiply them by 15% to figure out how much you can deduct from your taxes. So that equals $15,000 towards your taxes payable. So how do you qualify for this renovation? So the individual who is claiming it, they have to be eligible for the disability tax credit, or the individual is 65 years of age older or older at the end of the year. So what's eligible and what's ineligible? A qualifying renovation is a renovation or alteration that is of an enduring nature and is integral to the eligible dwelling. The renovation must meet one of the following conditions: allow the qualifying individual to gain access to or to be mobile or functional within the dwelling, reduce the risk of harm to the qualifying individual within the dwelling or in gaining access. An item you buy that will not become a permanent part of your dwelling is generally not eligible. There's a reference notation on the slide, and that is a very good explanation. So we're going to come back to this renovation for more tax credits. I mentioned it was a triple whammy before. But before we do that, let's go to the next slide, please. Splitting pensions. So I'll show you how our couple will split the $32,000 spiffy pension. You can split up to 50% of a qualifying pension, and qualifying is the key word for this deduction. Fascinating is going to end up getting a $16,000 deduction to his net income, while Bunny will add $16,000 to her income. So what you also have to note is that because you've split it, you've also split the taxes. So now half of the $5,000 in taxes that I mentioned will now be attributed to Bunny. Both will be entitled to claim a pension income amount, which is set at a maximum of $2,000. At this point, I want to expand a bit more on what and why of splitting income. Simply, and you can go to the next slide, please. If you get a T4A and the money is located on line 11,500, 11,600, or 12,900 of your return, it would qualify. It would not include CPP or OAS. There's an excellent chart in the Federal Income Tax and Benefit Guide, Step 2 under Retirement Income Summary Table. This chart identifies which type of pensions qualify for splitting, the pension amount, and under what condition it's eligible. So let's take a look at the first box and go to the next slide because I've expanded it. Our summary table indicates that pension income reported in box 16 on the T4A has no conditions or restrictions attached to it. One such condition might be that the annuitant must be 65 years or older on December 31st of that year. This pension is eligible for the pension amount and income splitting as well. Okay, the next slide, please. So back to the federal return. So let's see how SPIFFy's T4A was reported on the tax return. So see the highlighted area near the top, other pensions or superannuation. It's reported on line 11500, which does qualify for the pension splitting and pension income amount. Up to half of the SPIFFy $32,000 can now be split with Bunny. If you have a tax program, in most instances, it will determine the optimum percentage to split. This is reflected on, it's called Form T1032, Joint Election to Split Income. Look down to box 26,000. Fascinating now has a taxable income of 37,700, which is 16,000 less than his actual total income of 53. Bunny now has a taxable income of 16,000 instead of 0. So why did we want to do this? It allows the higher income spouse to shift some of their income to the lower income spouse, whether they're married or common law. A significantly lower income spouse will be in a lower income tax bracket. Okay, good. Pension income amount. Excuse me. So the pension income is a non-refundable tax credit that I've mentioned for $2,000. Looking further down at the pension income amount, line 31,400, both have a $2,000 credit now. Our pair both have 16,000 in eligible credits for this deduction, but the maximum allowable is $2,000 each. If you said to yourself, and that's a non-refundable tax credit, you're right. And if you're wondering about the 5,000 taxes withheld, you're right, that the total income deducted will change to $2,500 each, which you'll see in our final summary. So the next slide, I'm going to talk about the disability tax credit because that's a non-refundable. The disability tax credit, now I'll call it the DTC, is a non-refundable tax credit that helps persons with disabilities or their supporting persons reduce the amount of income tax they may have to pay. The disability amount may be claimed once the person with the disability is eligible for the DTC. I'll address how you get a DTC in a moment. So the disability amount for self is on line 31,600 for $85.76. Claim this if you have a valid disability tax certificate. In our example, Bunny had the valid DTC and has claimed the amount on box 31,600. Next is line 32,600, which are amounts transferred from your spouse or partner. You can see 10,178 is being transferred from Bunny to Fascinating. So could you go to the next slide, please? Okay, allocating tax credits to your spouse. Look at the bottom part of the slide. This is a portion of Fascinating Schedule 2 of his tax returns that shows the amount transferred from Bunny. It's her disability amount for self. Last year it was $8,576, and the $2,000 pension income amount that's being moved over to Fascinating. It doesn't exactly add up, but the reason it's related to Bunny's adjustable taxable income, which is $398, and I'm not going to be covering that today. We have not addressed the disability amount transferred from line 31800, disability amount transferred from a dependent. You would qualify for this amount if the dependent's taxable income was between the amounts of change, approximately 13,200 and 21,800. So now exactly what's the DTC? The next slide, please. The DTC is available to people with a severe and prolonged impairment in physical or mental function. So to put it another way, it's for people who are profoundly impacted in their daily activities that most of us would take for granted. This means it goes beyond being able to work. There are specific criteria that must be met. Three examples of conditions that I've seen qualify are bipolar disorder, dementia, or spina bifida. A qualified medical practitioner completes its Form 2201, the Disability Tax Credit Certificate. Just having the diagnosis that I mentioned above does not guarantee approval. Approval is based on how the condition affects the person's daily living. And that's what they want the doctor to focus on, is what's happening in the person's life. So there is a reference at the top. And there's also a guide, RC 4064. Disability related information. You can see if you might qualify by filling out the self-assessment questionnaire in the guidebook. When approved, CRA issues a letter of determination indicating the time frame of the approval. The letter may be retroactive to the date of onset provided by the practitioner. This entitles the taxpayer and caregiver to retroactively adjust their tax returns to reflect the disability amount for self and caregiver amounts for up to 10 years. I want to address a few things about this process that I think are extremely important, and these are things that we've sort of collected over the years. The next slide, please. So before you even do this Form T2201, does the medical professional support the application? I've seen applications that are quite clear that the doctor doesn't support the request, which it's a waste of your time, our time, and the doctor's time. So it's important that you approach the subject, they know what the DTC is, and just ask, am I a candidate for this? Next, do you agree with the date of onset? If you could stay on the same slide. Do you agree with the date of onset your medical practitioner has indicated? So many times I've seen the practitioner erroneously state the date of onset as the current year, which either leaves years of adjustments left on the table or having to go back and request a review of the decision. There's a box you can check on the T2201 that asks CRA to automatically go back and adjust the non-refundable tax credit. Next, and this, not next slide, next, not next slide. Next, and this is where so much money is never claimed by people with retroactive claims. Being eligible for this credit may lead to other available credits besides the disability amount for self. That should be a positive. However, when you tick that little box on the form, usually just the disability amount for self is reassessed. There is a refundable tax credit called the Canada Workers Benefit, which helps low-income earners. The CWB has two parts, a basic amount and a disability supplement. Actually, I was just talking too with Minik about tuition. Tuition also has a disability supplement area. So that would be something that would have to be reassessed, and that would not be done automatically. So getting back to the Canada Workers Benefit, the supplement amount for 2020 was $700 extra. And that is not a non-refundable, or sorry, a refundable tax credit. Having the DTC lowers the threshold for being able to claim the Canada Workers Benefit. We're now advising clients who are completing the form to tick the box and to write, please also reassess my electives, including the working income tax benefit. I've been advised that this does not always ensure that it gets done. I've talked to quite a few agents at Canada Revenue Agency, and I get mixed answers. Sometimes I'm told they will go back just 3 years. Sometimes I'm told they'll go back 10 years automatically. So I think the important note that I take from this is it's really important to look at your reassessment when you get it to ensure that the credits were done properly. This is also something that we do at Opportunities, is assist people who are needing help with this. Also, the amount for the caregiver is never automatically reassessed. The caregiver needs to submit an adjustment request or send a letter to CRA. So having the disability tax credit may open the door to other programs. One such benefit is the child disability benefit, which is a tax-free monthly payment made to families who care for a child under age 18. And last year it was approximately $240 a month, and it's just added to the Canada Child Benefit. Just one more little note before we leave the slide. If you're declined for the disability tax credit and you disagree with the decision, appeal. We've had quite a bit of success with appeals to date. So here comes another digression, and the next slide, please. If you have the DTC and you're under age 49, it really makes sense to open a registered, it's called a registered disability savings plan. It's just like an RSP, except it has a D, a disability in it. With up to $20,000 in federal bonds, a great matching program, and a one-time grant of $150 for BC residents, it's an excellent way to save for retirement. At age 60, the plan owner begins to receive the funds. How it works is the amount in the plan is divided by the number of years before you turn 83, or 10% of the amount in the plan per year. This amount is also excluded from PWD or social assistance. If you're on social assistance, PWD, you have to tell them about any money you receive. It is excluded from their calculations, both if it's the grants, bonds, or in the future, if it's coming out as an annuity payment. How the $20,000 from the government works is they will pay a bond of up to $1,000 a year, including up to $10,000 retroactively. The amount received is based on the client's income, and the lifetime bond limit is $20,000. A bond can be paid into an RDSP until the year in which the beneficiary turns 49. There's also a matching program. Depending on family income, on the first $500 contribution, there's a $3 grant for every dollar contributed, up to $1,500 a year. On the next $1,000, a $2 grant for every dollar contributed, up to $2,000 a year. These plans are offered at all major banks and credit unions. Once the disability tax credit is approved, it's time to book an appointment to open your RDSP at your preferred financial institution. The government and financial institution will take care of any contributions from these two programs. There is a phone number to call shown on the slide, 1-800-622-6232. The website, oh, you can see the website there. So the next slide, I just want to talk a little bit about the endowment that goes with this. There's a one-time grant called Endowment 150 available to BC residents under age 60 who have had income below $30,450 for at least 1 year after 2008. So this can go to people who already have a well-established RDSP. If this $150 grant is the first contribution of the year, it would be matched with a federal $3 grant per every dollar, which is $450. So you've just turned the $150 into $600. So there is a caveat to the Endowment 150. You have to apply for this retroactively. I'm not aware of any bank that advises that this is available. Plan Institute is a nonprofit organization that I've used on numerous occasions and are also an excellent source of information. Their phone number is on the slide. So let's go back to deductions, and the next slide is medical expenses. Remember that home accessibility expenses credit for $10,000 you claimed. As long as they are eligible medical expenses, like a permanent ramp or an elevator, you can claim this expense a second time. And guess what? In a few moments, I'll tell you how to claim it for the third time. As you can see here, you can't claim all of the medical expense as a non-refundable credit. You have to deduct, it's approximately 2,400 or 3% of your net income, whichever is less. So Fascinating's income was 37,700 and 3% of that amount is 11,3307. So the non-refundable amount for the expense becomes 8866.93 as shown on line 33,200. Now, if your medical expenses are less than the lower of 3% of your net income or 2,397, you will not be eligible for this expense. Next slide, please. I encourage you to reference the medical booklet for eligible medical expenses. Some eligible expenses are prescriptions not covered by a medical plan, insurance premiums for drug benefit plans, out-of-town travel expenses, including mileage, meals, and hotel costs. One thing that I'm aware of that is not claimable is most vitamins or supplements. So we finished now going through our non-refundable tax credits. All you need now is to see how it actually works. So let's go to slide 30 and we're going to total the non-refundable credits. Once you've added up all the credits, line 33,500, multiply that amount by 15% to get the amount at line 35,000. This is the amount you will use to deduct your taxes payable to zero. Take a look at the net federal tax portion section of the slide. That's Bunny's in the middle. She has 2,400 in federal taxes payable, but she has a non-refundable tax credit of over 3,900. So Bunny will have zero taxes payable. Fascinating, who's on the left, owes 5,665, but he has a non-refundable tax credit of 8,500. His federal taxes are zero as well. So now let's just take a look at that renovation working for you a third time and go to the next slide. So here is a refundable tax credit in action. So we finished the federal tax credits. This is a BC refundable tax credit. It has the same qualifications as the federal accessibility non-fundable tax credit. You can claim 10% of the renovation for a maximum amount of $10,000 and have a maximum refundable credit of $1,000. You put this on line 47,900, which is in the provincial or territorial credit section and highlighted in yellow, located at the bottom half of the slide. So now let's do a finale here. Next slide. So the refund. Now, I know you've all been thinking, don't I have to pay provincial taxes as well? Yes, you do. So take a look at line 43,500. Thanks to all the tax credits, Fascinating owes $165, while Bunny owes zero. Pretty good for an income of 53,000. But wait, folks, there's more. Bunny paid $2,500 in taxes. Remember that Bunny received half of Fascinating's pension income from Spiffy, and that meant splitting the taxes paid. Since Bunny owes zero, she's going to get a refund of $2,500. Fascinating owes $165.59. He's already paid $2,500, plus he's getting the refundable BC renovation tax credit of $1,000. So his refund goes to just over $3,300. So he's receiving $834 more than he paid in income tax. So they're getting back their $5,000 plus $834. So that's how our couple earning $53,000 ended up with a refund of $800. I feel like it's a magic trick. Okay, now for our newcomers. Next slide, please. We have seen that most newcomers miss out on benefits they may be entitled to after settling in Canada. A newcomer to CRA is someone who came to Canada in 2021. So I want to talk a little bit about GST. And I also find that when newcomers, most of our newcomers that we see are students, and they don't know what the GST is. We'll say, and your GST is, and there's a blank look, and you're going to get it quarterly, another blank look. So the goods and services tax, harmonized sales tax, credit is a tax-free quarterly payment that helps individuals and families with low and modest incomes offset all or part of the GST or HST that they pay. It may also include payments from provincial and territorial programs. So you're automatically considered for the GST when you file your taxes. Many do not know that GST, what it is, and are surprised when they see the quarterly credit deposited into their account in July after they file their first return. So many newcomers are eligible for the GST before they file their first return, and I find this is where they miss out. You're generally eligible for the GST credit if you're considered a Canadian resident for income tax purposes the month before and at the beginning of the month in which CRA makes a payment, which is April, July, October, and January. You also need to meet some criteria. You have to be at least 19. You have or had a spouse or common law partner. You are or were a parent and lived with your child. So how do they apply for this before they've done their taxes? To apply for this, it's a special form. It's called an RC 151. If you have children and are married, you have to fill out both an RC 66 and an 66 SCH. And the form is a bit confusing. I know that the IWC, the Immigrant Welcome Center, helps with this form as well as we do. There is a guide. It's called RC 4210 Newcomers to Canada. So the next slide is not happy. What do you do if you can't pay? So this year, to avoid late interest or filing penalties, what's owing for this year's taxes is due by May 2nd, 2022. If you're struggling with your tax payments, you can work with CRA to find ways to pay your tax debt based on your financial situation. They acknowledge that we're still in challenging times. In fact, there is still, for about a month more, a COVID-related interest relief on 2020 taxes. You might have been eligible for interest relief on your 2020 taxes owing if you received COVID-19 benefits in 2020. You must have met all the criteria to be eligible for interest relief. The CRA will not start charging interest on your 2020 taxes owing until after April 30th, 2022. So to be eligible for the interest relief on the 2020 taxes owing, it was automatically given if your 2020 taxable income was below $75,000, if you received at least one COVID-19 benefit in 2020. So just a couple of them were the CERB, the Canada Emergency Response Benefit, or the Canada Recovery Benefit. And the third criteria is that you had filed your 2020 return. So you need to meet all of the above criteria, and the relief would just be automatically. So if you met all the criteria and you filed your 2020 return, the CRA automatically applied the interest relief. You don't have to pay interest on any amount owing from your 2020 taxes until April 30th, 2022. And the interest relief only applies to the 2020 taxes owing. So if you were carrying a balance forward, that would still calculate the interest owing. If you can't make a payment, your tax debt will grow with the addition of interest charges. If you can't pay what you owe, it's best to contact CRA to discuss your options. So one of the things that you can do is make a payment arrangement. If you can't afford to pay your taxes in one payment, you may be able to set up a payment arrangement with CRA. The payment arrangement is an agreement between you and CRA. It allows you to spread out your payments over time based on your ability to pay until you have paid your debt and interest in full. The CRA will work with you on a payment arrangement that works for your situation. It will continuously work with you to schedule payment arrangements, but can also apply credits or refunds towards outstanding debt to help you with any outstanding amounts owing. Before calling the CRA, we encourage you to work out a budget to help you determine what you can afford to pay on a regular basis. To make a payment arrangement, I would recommend you contact the CRA as soon as possible at 1-888-863-8657. Another thing too, if you file late and you owe money, you're also charged a late filing fee. And if you're carrying this forward, you're also paying interest on the late filing fee. So some people are just unable to pay. One of the options is to apply for penalty and interest relief. So you may be approved for relief from the penalty or interest. So not from the balance, but from the penalties and interest. So some of the situations that might qualify would be extraordinary circumstances. So my house burnt down. Actions of the Canada Revenue Agency, if you got wrong information about something, inability to pay or financial hardship, or other circumstances. One of the things I do want to say is not filing your taxes will not make your debt go away. It's still there. I also want to say, make a comment about the penalty relief. It is a long process. I have a file that is just concluding now, and they got their decision, which it's a very interesting decision. The debt we were talking about, and actually two of my cases, occurred more than 10 years ago. So we were talking about a debt that occurred in the early 2000s. So it keeps accumulating interest. So what they have agreed to do is not cancel the debt, but they have agreed to reverse all the interest that's been charged for the past 10 years. So in the case of one of these clients, it's going to cancel the whole amount owing and give them some money back because they had been making partial payments. So that debt that was constantly accumulating debt interest from the early 2000s will now be gone. And what's interesting though is it takes up to 16 weeks once they've made the decision to receive your money. Okay, so my final topic will be adjustment requests, and the last slide, please. So we all make mistakes, and I love adjustment requests. So it is easy to correct your income tax and benefit return if you realize after filing that you made a mistake. You should wait until you get your notice of assessment from CRA before you make the change on your return. One of the reasons is I've, for example, missed a T4 slip, and I had done the correction right away because I saw what I had done. but CRA caught it. So sometimes they will catch the mistake. So that's why you do need to wait for your notice of assessment. So there's 3 ways to correct a return once you've received your notice of assessment. There's something called Change My Return, which is in my account. You can send a completed, it's called a T1 adjustment request. That's what we use mostly in the office. Those get mailed, and the process time right now, I believe, is more than 12 weeks. The other way, if you don't know how to fill out the form, is to send a signed letter to the tax center asking for what you want. If you send a letter, make sure you give your name, address, social insurance number, and tell them for which tax year you're talking about. You have to provide any supporting documentation for your change. For example, if you want to change the amount you claimed for charitable donations, you have to submit your charitable donation receipts to support your claim. So one of the differences between a return and an adjustment is you do have to send the original documentation. And I'm now going to turn it over to Druin, who is in Powell River.
Hello, good evening, everybody. Thanks for joining us. My name is Druin. I work with MP Rachel Blaney here in the Powell River office on Marine Avenue. Tonight, I'm going to talk to you about the Guaranteed Income Supplement, or what we call the GIS. So the GIS is a supplement that you can get if you're 65 years of age or older, you live in Canada, and you are already getting the old age security pension. As you can see, that you have to have a certain income. You have to be below $18,744 in your annual income if you're single, widowed, or divorced in order to qualify for the GIS. And when you include the income of your spouse, your common law partner, you have to be below 24,768 if your partner receives the full OAS pension, or if they don't receive the OAS pension or receive the allowance. 44,928 is the ceiling. And this is a pretty important figure to pay attention to, and you can see it. It changes year by year. When I checked the figures this year, it had changed by about $240. So you want to go on canada.ca and take a look at what your GIS ceiling is, and try to keep your income below that if you're trying to apply for the GIS. The GIS, could I have the next screen, please, Christy? Your GIS is not taxable. You get your first payment after you turn 65. And you have to remember that you have to apply for the GIS. It's not automatic that you are enrolled to the program, even if you are receiving OAS payments. Your spouse may be eligible for the payment, and your combined income determines how much you will get each month. It's really important to file your taxes on time. Otherwise, you'll be late and there'll be disruptions to your payments. And again, remember to go on to canada.ca and see what that ceiling is for your income before you're eligible for GIS. There's canada.ca at the bottom is the website that you want to take a look at. Reporting your income is really, really important because it affects the calculation of your GIS. Your income may vary from year by year, depending upon if you got an inheritance or if you collected CERB during COVID, for example. We had a problem recently where seniors either collected CERB, the CERB payment, or CRB, which is the Canada Recovery benefit, and collecting these benefits adversely affected their GIS payments and made life very precarious for a great deal of our seniors across Canada. I'll give you an example. Here in Powell River, and I know on the island as well, seniors who collect CPP, OAS, and GIS are still eligible to work at a part-time job and earn up to $5,000 a year before being affected. So seniors who are working, let's say, as a greeter at a local store to earn a little bit of extra money, they lost their job when the stores closed due to the pandemic. The government had a remedy, however, and they offered these workers CERB, and they gratefully accepted the payments. So you can imagine their shock in April when they did their income tax and found that this was taxable income, although they hadn't really read that anywhere to know that the income was going to be included. And they found that they weren't eligible for GIS. In one case, one of our seniors that came into our office went from having a combined income of CPP, OAS, and GIS. She made a modest $1,800 a month. After her income increased because of CERB payments, her GIS was eliminated entirely, leaving her $850 a month. Well, her rent is $1,000. Her food, how is she supposed to eat? And I want to share with you, because she gave me permission to, that she has not had fresh food for many months now because she's eating out of her cupboards, waiting for this GIS recalculation and monies to come in the following months. We heard many, many heartbreaking stories, and people that couldn't pay their rent, they couldn't buy food, they couldn't pay for their prescription drugs. So they were taking medications every third day instead of taking them every day. It's been pretty devastating for a lot of people. So MP Rachel Blaney and the NDP spoke out against this injustice from the very, very beginning. And our offices were helping these people and feeding the information to our MP and others across the country so they could demand that the federal government accept that they've made a mistake and make this mistake right and take some action to fix it. Fortunately, if you're a senior who's been affected by what has we call the GIS clawback, please don't feel alone. You're one of over 100,000 seniors across the country who are affected by this problem. And thanks to the NDP's relentless lobbying on your behalf, regardless of the date received, seniors who saw reductions in GIS in 2020 will get one-time payments that fully compensate or reimburse them. Those who received pandemic income benefits in 2021 or are now receiving these benefits will see that exempted. So just a small note, the one-time payment that seniors will receive will be a full repayment of the difference between the GIS that they have been receiving since July 2021 and what they should have received for the full 12 months had the pandemic income been exempt for 2020. So if this makes sense to you, or you think you might need help with this, or you know some senior in your neighborhood or a relative who might need help, please contact our community office, and I'll be more than happy to help you with this problem. And the Campbell River office, I'm sure, is the very same. And that's it for my little GIS presentation. Should we go on to the fraudsters and scammers? Okay, thank you very much. So fraudsters and scammers. These target the most vulnerable taxpayers, including seniors and newcomers to Canada. And the CRA has a publicly available information on its Slam the Scam webpage. It's at canada.ca/taxes fraud prevention. And it's really important if you have a senior or in your life, like a relative or a neighborhood friend, to just like check in on them and let them know that there's certain things that the CRA will and will not do to kind of help them understand whether they're being scammed or not. I have made my friend who was scammed last year, I've made her promise that if anything tweaks her better judgment and she's wondering about it, that she must phone me first. She can phone the CRA too if she wants, but as her friend, I'll take that responsibility and ask her to please phone me first so I can set her straight, because she got scammed last year. Even though she was cautioned, she got a phone call that said, you owe $1,500 to the CRA, and if you don't pay it up right now, we're going to have the RCMP on your doorstep in 20 minutes. Well, she panicked. 20 minutes isn't very long. Well, what do I have to do? She said. They instructed her to go to the Walmart store nearby and to get $1,500 out in iTunes cards. They told her that this is a new money order. So my friend did exactly as she was told. Off she went to Walmart and she bought $1,500 in iTunes cards. And she was instructed by phone to read the number off the back immediately upon purchasing them, which she did. Then she got another phone call saying, well done, but you owe another $1,500 or we're going to have the RCMP on your doorstep. This time, being a Saturday, she went to her bank to transfer some money out of one account into the other. And the bank manager happened to ask her, what are you doing? Why are you here again today? And she explained what she was doing. And the bank manager said, come into my office. Let's wait for this fellow to phone you back. And he did phone her back, and the bank manager gave him a very hard time, and he hung up on her. But it didn't help my friend. She got scammed for $1,500 and it's not coming back. So we have to beware that other people in our lives don't have the same treatment. How do we know? Christy, could we go to the next slide, please? So yes and no, 2 columns here. If you get an email or a letter from the CRA regarding a legitimate tax issue, okay, you can listen to that. But are you worried a little bit? Then ask the agent calling you for their name, their phone number, and an office location. And then you can say, I'll phone you back, and you can do so. You can ask the person, or you can call the number listed on the CRA website to verify the contact. And you can also ask for time. You can say to them, how about if I phone you back later on today, and you phone a relative, you go and talk to your bank, or you make another call. You don't have to do this right away. If you receive a phone call, a text, an email, or a letter about an unusual tax issue, it's probably a scam. If you are told you must pay this debt immediately, or the RCMP are going to be on your doorstep, that's a scam. You don't have to give them credit card numbers. You shouldn't be asked for gift cards, cryptocurrency, or any other kind of payments. That's a scam. You should discourage verification of ID. Don't give them any information of yours. Don't give them your social insurance number. Give them no information. If the person you're talking to is a bit disrespectful and threatening, that's a scam. Just hang up on them. Surprisingly, I work for the MP, and I've had phone calls at this office. And I think, wow, you're so silly. Don't you know who you're talking to? And I just hang up on them. We have the next slide, please, Christy. Some people run into problems earlier, I think it was the year before last, when all of a sudden their My Account disappeared off the screen and they couldn't have access to it. We found out that it was because the CRA disqualified people who were using the identical passwords for many different programs. So you want to have a unique password for different systems. I have a friend who works in security, and he said a really good thing to do is to say, for your password, you could say something like, my dog's name is Rover, and spell Rover with a 0 instead of an O, or a capital V, and something that only you know, but a sentence that you can remember quite easily. And you can help your older relatives with this too. They should change their password occasionally, you know, even once a year is not too often, so that they foil anybody who's trying to get through. You can monitor all your accounts for suspicious activity. Well, my friend doesn't really know what suspicious activity is, so I help her with that. My Account is secure. You can register for a My Account, and you can find out all the information that you want on it. There's so much information, it's surprising. And one of the best tips of all is you can sign up for email notifications. And if you enable the email notifications, then you get an email directly to your address or direct deposit information, and it's all on CRA records. So that is an early warning for, you know, somebody if they're trying to pull a scam. It's just one more layer of safety. Could I have the next slide, please? Yeah. Okay, so what if you are a victim of fraud? Well, aside from feeling absolutely sometimes guilt-ridden or ashamed of yourself for falling for this, like my friend did, she was ashamed to tell anybody. But you know, we can help you. My office can help you contact the CRA if you notice suspicious activity on your My Account. You can file a complaint with the police, which is a really good idea, because in a small town like Paul River, sometimes you find out that you're one of 2, 3, 5, 7 people that are also being targeted. You can contact the Canadian Anti-Fraud Centre. We have 2 credit bureaus that it's really important to call them if you are involved in a scam. I did this on behalf of my friend, and both companies, there's 1-800 numbers, Equifax and TransUnion, and they were both totally helpful, and you're able to get a hold of them 24/7. You can inform your bank and creditors by phone about any irregularities, and of course your mail delivery system, same thing, and also contact Canada, Contact Service Canada. They'll help you too. Next slide, please, Christy. I think this is somebody else that's taking this. Thank you, everybody.
Okay, my name is Blaney and I work in Rachel's Campbell River office. And I deal with a lot of the casework that comes our way. So when not only when it's tax time, but throughout the year, myself and others, our office, we collaborate a lot with the tax preparers such as Bonnie, or sometimes the constituents come directly to us. So what I want to, in addition to all of the information that Bonnie and Drew have provided, just wanted to talk about where you can get assistance. There are so many different issues that you can potentially run into with the Canada Revenue Agency. And as Bonnie pointed out, it's very important that you maintain communications with the Canada Revenue Agency, but that's not always easy to do. So one of the things you can do is there is an independent body, and it's called the Taxpayers Ombudsperson's Office. And they work independently from the CRA, even though they're dealing with tax issues according to the legislation that's in place. And so if a taxpayer runs into a complicated issue, and that can be related to the delivery of their notice of assessment, how much time it may take, their interactions with the CRA, they can reach out to the Ombudsperson's office, and they will independently review the issue. And it can be very helpful to the individual, but as well as the information that they can report back in terms of dealing with systemic issues. So, for example, more recently, and any of you who may have tried to reach out to the CRA know that it's very difficult to get through to them. That may be in part because in the past few years, CRA was also managing emergency benefits in addition to Service Canada, but it doesn't make it any better for the person dealing with their issue. And if you're trying to call CRA and you're having to wait on the phone for 4 hours. So this was an issue that was brought to their attention. And so they did, I guess you'd call it an investigation, and then report it back to CRA as well as to the public on that issue. I know that Bonnie has mentioned specific individual cases that she may have dealt with the Ombudsperson's office. Bonnie, do you have an example you can share with us?
Yes, I have an example of a couple that were applying for taxpayer relief, as well as some adjustments to the tax returns. And it got caught in between the adjustments, if it was to be done through the business side of Canada Revenue Agency or personal. And so it was caught in this nightmare, just these adjustments. And this family was suffering financially. And I think I was up to a year for the adjustment, which that's absolutely ridiculous. And I was over a year for the penalty relief. And what really made me go to the ombudsperson was I found out that the penalty relief area was closed because everyone had been redeployed for COVID-related issues. So for months, you couldn't do anything. There was nobody there. So I contacted the ombudsman based on systemic issues and time-related complaint. So especially the systemic issue, what they did was you are put in touch with one person at CRA, and that one person has to call you back within a time frame. And that happened, and this adjustment got done right away, which helped to relieve some of the financial pressure this couple had. And I mentioned before that I have a few penalty relief that have taken one's over 2 years. So I have found the ombudsman personally very helpful.
Okay, thank you, Bonnie. So back on the previous slide, the ombudsperson slide, I've provided the contact information there. You can also, they do accept collect calls. There is also, if you search online, you can find the link to, their website, because you can submit your complaint online, or you can submit it by mail. But this is one of the ways that Rachel's office can help. If you're ever in the position that you need to interface with their office and you're having difficulty knowing how to submit your complaint or what information is needed, we would be more than happy to assist with that. Next slide, please. Okay, so in our offices throughout the year, and sometimes it's directly from the taxpayers, we work with them, but we have many constituents who may have received a communication from the Canada Revenue Agency in response to perhaps an adjustment that was submitted, and they're not quite sure what is being requested with the communication, and it may be stressful to them because they don't know what they should be submitting. Then they try to call them, they can't get through, they worry about the time frames. If you're ever in that situation, please do contact us, because we can help you by asking those questions on your behalf. And one of the things I want to point out is when the MP office is dealing with you, in particular on complex issues, we deal with one person. One person is assigned your file. If you're calling through the call center, sometimes you may have 2 or 3 people deal with your file, and that might make it more difficult for you. Now, if they're simple requests, then that's not an issue. But if you do have something that's more complex, just based on the return requirements that CRA has communicated to you, it's better to address it promptly. And, we'll certainly try to find the ways to do that. We've had Bonnie mentioned, the growing number of disability tax credit applications. Sometimes they get processed quickly. Sometimes they require more information from the medical professional. We can check on the status of your application. We can provide clarifying information on, what the medical practitioner how they should assist you. Sometimes people have trouble with final returns. They can't find tax slips, that kind of thing. We can help you get the CRA to check what may be available, and we can get copies of those tax slips. So, people, and especially at a very stressful time, are trying to figure out, well, what are we going to file? Where are the papers? Bonnie mentioned payment plans. People are often afraid to ask for that. We can assist you with that and dealing with the right people. Another area where we've often provided assistance are with benefits, such as the child tax benefit. That can be a long process if the constituent needs to provide additional information. So there's a lot of different areas. And if you're not sure about something, be sure to call Rachel's Campbell River office or the Powell River office. Drew and Sophie are in the Powell River office. And we will always do our very best to see what can be worked out. So the responses are what you need in order to work out any issues you run into. Yeah, so any question is accepted, and we're here to help. Oh, one more thing I'd like to mention. Rachel earlier mentioned the tax guide. And this tax guide has been prepared based on the most common questions we received, in the last year. What things we think you need to have ready for when you bring your taxes to the tax preparer, such as Bonnie. And you should be receiving it within the next 2 weeks. Okay. Thank you. Back to Rachel. Back to
Thank
Rachel.
you, Monique. Thank you to all of you. And thank you to the folks that are here today. I just want to remind everyone that we are recording this. So one of the reasons we are not allowing big questions is because we found in last year's event, people shared a lot of personal information. And I don't want that recorded and shared with other folks. So if you do have questions, you can send a message to us on the chat and we'll get somebody to contact you, or feel free to call or email our office at any time and we will do the best that we can. And I really want to support what Monique has said. I have seen Monique and Druin do wonderful things with people who are in the middle of a hard crisis. Something has happened with CRA and they're able to move through the process with them. And I will be honest, sometimes it's a quick fix and sometimes it's a very long process to get to that fix. But we have an amazing team here who will walk with you down that process. And just to clarify roles, my team helps you walk through the process and get it done. What I do on my side is I spend time with either the minister or the department to try to get them to fix where the process is broken. I am not always successful in that, but that's what I try to do. And I really appreciate people who are willing to share their stories with me so that I can make sure that the minister understands the implications of the way their processes work. And I also have to say that even before this job, I worked with Bonnie, and I have seen Bonnie come in when we have folks walk in our office that haven't done their taxes for 7 years because of different health issues or crises that they experienced. And we just get it all done. And it makes such a difference in their lives. And I really appreciate Bonnie because she volunteers her time to help people. And I just want to recognize that. Bonnie isn't somebody who gets a paycheck at the end of the week. She is a woman who has done over 500 tax returns already this year because she really wants to make people's lives better. And I really appreciate Monique as well talking about how hard it is to talk to CRA sometimes. And I really want you to know that if it does get difficult, let us know. We're happy to walk with you on this. It can be hard. And around the GIS, I appreciate all the compliments from Druin, but I also think what she said is really important. We have worked with people who work just an extra couple of hours a year and make $50 more than they should, and they no longer qualify for the GIS. So please spend time knowing how much money you can make on top of your income so that you don't lose that important benefit. It's just not worth the risk. And I also want to say that sometimes when we talk about fraud, we talk about older people who get sucked into that system. But I also want to point out that young people do as well. I had one constituent come in and have a chat with me, and she said her son had moved away from home. He was about 20 years old. He called her one day in a panic and said, "Mom, I need you to send me $5,000 and I need it right now." And she was like, "Son, what is wrong?" And he wouldn't tell her. He just said, "Mom, I need the $5,000. So she was a good mom. She sent her son the $5,000, was terrified that something bad had happened. She called him back until he finally answered the phone. And he told her that CRA had called him and was on the phone. They had told him to call his mom and get her to send money. So the mom did that. And they were listening. CRA, not obviously CRA, was listening on the other line. And that happened. So I think it's so important. I have young adults in my life. I try to tell them all the time, CRA will not threaten you with the RCMP. They will not threaten you with violence. And they certainly won't make you call somebody in your life who has money and listen into the conversation to make sure that that money gets to them. So it's important to be educated and know that, cons are always really savvy. They're very persuasive. So make sure that you feel comfortable to say no and then call CRA directly, or of course you can always call our office and we're willing to look into that for you as well. So this is it. I'm going to wrap up today and thank you all for attending. I really appreciate all of our presenters here. Tax time is never the funnest time of the year, but it's an important part of the time. And we want to make sure that you get every benefit that you are due. So everybody have a lovely evening. And like I said, if you have any further questions, don't hesitate to give us a call or send us an email, and we will give you a reference to the person to talk to if it isn't us, and we'll support you through the whole process. And thanks again. Good night, everyone.